Right, picture this. It's the morning of May 15th, 2025. The stock market bell hasn't even finished echoing, and somewhere inside the Pelosi household, a single trade is about to make $4.7 million in one day. Not over a decade, not with some slow and steady pension fund. Literally before most of us have even finished our morning coffee. By lunchtime, the Pelosis have outperformed every major hedge fund in America. By the closing bell, their portfolio has gained more in hours than most families will see in a lifetime. And here's the bit that really makes you want to spit out your tea. The company involved. Smack bang in the middle of legislation Nancy Pelosi herself had been debating in Congress just weeks earlier. Now, this isn't a one-off lucky punt. This is part of a streak so improbable, it makes Warren Buffett look like he's just flinging darts at a stock chart. We're talking a 700% portfolio growth over 10 years, returns that crush the S&P 500, obliterate hedge funds, and have traders on Reddit building entire portfolios that just copy whatever Paul Pelosi buys next. And yet, officially, it's all above board, perfectly legal. Just a free market economy, as Nancy herself once put it.
Because this is a free market and people, we're a free market economy, they should be able to participate in that.
Before doing a complete U-turn years later and supporting a trading ban, once public outrage got a little too close for comfort. In this video, we're going to peel back the curtain on one of the most remarkable wealth-building stories in political history, from a Baltimore mayor's daughter to the most powerful woman in Washington, and the suspiciously perfect trades that helped turn a $31 million net worth into a staggering $400 million fortune. This is the story of Nancy Pelosi, the congresswoman who beats Wall Street at its own game, whilst writing the rules of that game herself. Once you see the timeline, you'll never look at a public servant the same way again. Now, before we dive into this tale of market-crushing trades wrapped in the language of public service, do me a favor and hit that like and subscribe button. You'll want to stick around for more stories about the crazy backwards world of business. If you've ever been on the wrong end of a stock market move, you buy the dip, it dips harder. You sell in frustration, and it rockets up the next day. You already know that investing is 90% heartbreak and 10% blind luck. Unless, of course, you're Paul Pelosi. In that case, it's 90% winning trades and 10% headlines accusing you of inside information.
Nancy Pelosi became rich by having inside information.
Now, here's where it gets properly disturbing. These wins don't come from the next big thing, penny stocks, or risky gambles that occasionally blow up. No, the Pelosi portfolio reads like the dream shopping list for anyone with a crystal ball in Washington. Apple, Nvidia, Microsoft, Alphabet, Amazon, Salesforce, all bought at just the right time, in just the right size, and often just before legislation or government funding that could send them soaring. Take Nvidia in 2022. Paul sells shares, at a loss, mind you, just before the CHIPS Act is passed, which pours billions into the semiconductor industry. Looks bad, right? Except months later, he piles into Nvidia options that balloon into millions of dollars in gains once the subsidies are flowing. Or Visa, way back in 2008. The Pelosis buy in right before the IPO. Weeks later, legislation that could have hurt Visa's business just sort of vanishes into the swamp. In 2011, 60 Minutes comes knocking with awkward questions. Nancy smiles politely, denies everything, and sails right on through. And it's not just old trades. The hits keep coming. In June 2025, Paul scoops up Tempus AI options. 17 days later, they're up 213%, netting over $160,000. A month later, Broadcom options triple after a perfectly timed purchase. In August, Trump's calling her a disgusting degenerate on live TV. And yet, the portfolio keeps winning. All told, the Pelosi machine has pulled off a 700% gain since 2014. In 2024 alone, the portfolio grows 70%, more than doubling Buffett's Berkshire Hathaway returns, even when the market stumbles, like the $14.5 million net worth drop in early 2025. They rebound so fast, you'd think the downturn was just a coffee break. And here's the twist. Every single bit of this is legal, or at least legal enough to survive investigations, media firestorms, and Twitter mobs with screenshots. The Stock Act of 2012 was meant to stop exactly this kind of thing, but it left one enormous loophole. Lawmakers and their spouses can still trade, as long as they disclose it within 45 days. And those disclosures, they're basically a shopping guide for anyone who wants to copy a member of Congress's portfolio, which is exactly what's been happening. ETFs like NANC literally mimic Pelosi's trades. Copy trading platforms openly market Pelosi tracker portfolios. Over $800 million in public money is following her husband's trades. It's not just investing anymore. It's become a public sport. But before she became the most scrutinized investor in Congress, Nancy Pelosi was something else entirely. The daughter of a Baltimore political dynasty, and a woman who knew the value of connections long before she knew the power of a perfectly timed stock trade. Long before she was the most watched trader in Congress, Nancy Pelosi was Nancy D'Alessandro. Born in 1940 in Baltimore, Maryland, into a family where politics wasn't a career, it was the family business. Her father, Thomas D'Alessandro Jr., wasn't just some local councilor. He was a U.S. congressman, then mayor of Baltimore, with a handshake network that stretched from the White House to the Catholic Church to the back rooms, where cigar smoke practically counted as currency. Her mother, also named Nancy, ran the political books at home, quite literally, keeping a ledger of favors owed and favors granted. So from the moment she could walk, young Nancy wasn't playing hopscotch. She was greeting voters on the front porch, memorizing names, and handing out campaign leaflets. Forget lemonade stands. She was learning how to work a donor list. Fast forward to the early 1960s. She graduates from Trinity College in Washington, D.C. in 1962, a Catholic women's school that produced more political insiders than most state legislatures. The very next year, she marries a young businessman named Paul Pelosi, a man with a head for numbers, an eye for real estate, and a talent for finding opportunity wherever people weren't looking. Paul was no ordinary spouse standing in the background, clapping politely at campaign rallies. He was building his own empire through a San Francisco-based investment and consulting firm called Financial Leasing Services, Inc., which sounds boring until you realize it was the legal shell for everything from venture capital stakes to high-end Napa Valley real estate. In the 1970s and 80s, while Nancy was working her way up the California Democratic Party ladder, fundraiser, organizer, eventually chair, Paul was quietly amassing assets. The Pelosis were picking up prime properties in San Francisco and Napa, long before tech billionaires turned the Bay Area into a monopoly board for the ultra-rich. But here's the crucial bit. Nancy's political rise wasn't just luck, and Paul's financial rise wasn't just good investing. This was a partnership. Every handshake Nancy made, every door she opened in politics, expanded the Pelosi's network of information and influence. And Paul, well, he knew how to turn a good tip into a well-timed buy order. By the time Nancy finally won her special election to Congress in 1987, she was stepping into the Capitol with a ready-made political machine behind her, and a household already wired into the kind of deal flow most investors could only dream about. From that point on, her official salary, even at its peak of $223,500 a year as Speaker, was almost a rounding error compared to what the Pelosi portfolio would start producing. And this was before the era of public disclosure websites, before watchdog groups were tracking congressional trades on Twitter, before the word Pelosi could cause a retail investor ETF to spike in a single afternoon. The stage was set. She had the connections, Paul had the capital, and Washington had the perfect cover. A job title that sounded like public service, and a trading rulebook full of holes big enough to sail a luxury yacht through. Next up, the loophole that turned this power couple from wealthy to Wall Street legendary. Here's the thing about Congress. It's not just a legislative body. It's the best-stocked rumor mill in the Western Hemisphere. Every week, members of Congress sit in closed-door briefings, where they hear things before the public does. Early whispers about antitrust cases, which companies might get huge government contracts, which industries are about to get a tax break or a boot to the face. For most of us, trading on that kind of privileged information would be called insider trading, a crime that can land you in prison quicker than you can say Martha Stewart. But in Washington, the rules are, let's just say, flexible. The key piece of legislation here is the Stock Act of 2012, formally designed to stop lawmakers from profiting off non-public information. Sounds noble, but the devil, as usual, is in the footnotes. The act says members and their spouses can't trade on material, non-public info, but it doesn't stop them from buying or selling stocks outright. All they have to do is disclose their trades within 45 days. No prior approval, no independent review, no serious enforcement. Translation: as long as you tick the paperwork box afterwards, you can legally make trades that look, smell, and taste exactly like insider trading, and you'll probably get away with it. The Pelosis didn't invent this loophole, but they've turned it into an art form. Paul Pelosi has an extraordinary habit of buying and selling just before market-moving events. We're not talking about a lucky streak in a casino. We're talking about trades so consistently well-timed, they'd make a professional hedge fund blush. Visa, 2008. The credit card giant is gearing up for its IPO, the biggest in US history at the time. Paul buys in. Days later, legislation that could have hit Visa's profits mysteriously stalls in the House, which Nancy just happened to be a senior member of. Shares skyrocket. Profit secured. Alphabet, 2019. The Department of Justice starts sniffing around big tech for antitrust violations. Weeks before it's public news, Paul makes moves that put him in prime position to benefit from Alphabet's recovery once the investigation chatter cools down. Nvidia, 2022. As Congress debates the CHIPS Act, a bill to pour billions into domestic semiconductor manufacturing, Paul dumps shares at a loss, avoiding further short-term drops. Then, after the subsidies are locked in, he jumps back in with call options. Those options balloon into millions, and that's just the publicly known stuff. Remember, these disclosures don't show the why, they just show the when. And the when in Pelosi world is almost always suspiciously close to when Washington decides to make or break an industry. Critics, from watchdog groups to internet sleuths, have been screaming about this for over a decade. The 2011 60 Minutes expose was one of the first big public jolts. It caught Pelosi visibly irritated when asked whether her family's Visa IPO's profit might be linked to legislation in her lap. Her answer, a polite but firm, "We've done nothing wrong."
What I'm asking is, do you think it's all right for a speaker to accept a very preferential and favorable stock deal?
Well, we didn't.
She wasn't lying, technically. The system really does allow it. That's the beauty or ugliness of the whole setup. And while other members of Congress dabble in the market, Josh Gottheimer, Tommy Tuberville, the usual suspects, none have become the brand that Pelosi has. Her name is now literal ticker symbol bait. There's an ETF called NANC that mirrors her portfolio. Copy trading platforms track Paul's disclosures so average investors can mimic them, sometimes generating millions in collective gains. The result? Every time a new Pelosi trade hits the disclosure site, finance Twitter goes into meltdown, Reddit threads light up, and news anchors read the filings like they're calling horse races. Pelosi just bought Broadcom calls is now a tradable event. This Pelosi effect has turned her from a politician into a quasi-financial signal. And while she's insisted, repeatedly, that she has no involvement in Paul's trades, the optics are damning. Imagine a referee in a football match whose spouse keeps placing perfect bets on the winning team, legally allowed as long as they file the betting slip afterwards. For more than a decade, the Pelosis have played this game openly. But the real question is, how long can you run the table before public outrage forces you to fold? By 2024, cracks were showing. Polls revealed 76% of Americans supported a ban on congressional stock trading. investigations into the timing of Pelosi trades began resurfacing. And in 2025, the scrutiny went nuclear. Not because of a watchdog report, but because Donald Trump decided to turn her trades into a political battering ram. Which brings us to the year where the heat finally became too much, and Pelosi had to decide whether to keep defending the free market line or jump ship and support a ban. If the 2000s were the warm-up act, the 10 years that followed were the Pelosis Stadium Tour. Between 2014 and 2024, their net worth didn't just grow, it detonated. This was the era where Paul Pelosi stopped looking like a savvy investor and started looking like a clairvoyant with a Bloomberg terminal. It began quietly. In 2014, their estimated net worth sat at a respectable $114 million. Hardly pocket change, but still small enough to keep them off the richest in Congress podium. By the end of that year, tech stocks had begun a bull run that would make history. Most investors rode the wave. Paul, he was already in position before the swell even formed. Over the next few years, the Pelosi portfolio fattened up with a who's who of Silicon Valley giants. Apple wasn't just a holding, it was a fortress worth between $25 million and $50 million on its own. Microsoft, Alphabet, Amazon, Salesforce, the kind of long-term positions that would make a pension fund jealous. 2017 was a turning point. While Wall Street was still debating whether the Trump tax cuts would help tech, Paul was quietly layering into positions that would benefit massively from the corporate tax holiday. By the time the ink was dry on the legislation, those trades were already paying out. Then came 2019, a year that would have humbled most traders. Trade war headlines, antitrust chatter, and the first rumblings of a global health crisis rattled markets. But somehow, the Pelosis avoided the worst drawdowns and were perfectly set for the 2020 rebound. When COVID-19 crashed the market in March 2020, they were ready to pounce. While average investors were panic-selling index funds, Paul was scooping up call options in companies poised to win the pandemic economy. Big tech, cloud services, chip makers, Nvidia, Microsoft, Alphabet, the tech backbone of the lockdown world, all moved in their favor. By the end of the year, the S&P 500 had gained around 16%. The Pelosi portfolio, up 65%. 2021 and 2022 brought even bolder moves. In one stretch, Paul executed a series of options trades that returned over 66% in a single year, not from meme stocks or biotech gambles, but from some of the safest blue chips in the business. The kicker, many of these positions aligned eerily well with industries facing key decisions in Congress. And 2023, that's when the legend status became cemented. While the market lurched through inflation fears, interest rate hikes, and recession talk, the Pelosi machine kept churning out double-digit gains. Real estate assets ballooned. $45 million in property, from Napa Vineyards to San Francisco commercial space, and their equity holdings sat at an estimated $133 million. But it was 2024 that broke the scoreboard. While Warren Buffett's Berkshire Hathaway was patting itself on the back for a 25% return, the Pelosi portfolio grew 70%. That's not beating the market, that's lapping it. Entire hedge funds closed their doors in envy. A few standout plays defined the year. The 500,000-plus sale of Visa stock just before the Department of Justice filed a lawsuit against the company, dodging a sell-off that caught plenty of other investors flat-footed. The rapid-fire flip of Tempus AI options for a 213% gain in just 17 days. The accumulation of Broadcom options right before an earnings announcement sent the stock vertical. And through all of this, here's a fact worth sitting with. Nancy Pelosi's official congressional salary, even at its peak of $223,500 as Speaker, has barely moved in over a decade. Her current $174,000 as a rank-and-file member is essentially frozen since 2009. In total, she's earned just over $5 million in salary across nearly 4 decades in the House. Respectable money, yes, but still less than what the Pelosi portfolio can make in a good month. That gap is why so many Americans don't buy the idea that this fortune was built on salary alone. By the end of 2024, their net worth had ballooned to an estimated $270 million, more than doubling from the start of the decade. And that's with the occasional self-inflicted wound, like the mistimed Nvidia sale in 2022, which was more of a stumble than a fall, since they jumped back in for millions in later gains. The scale of this decade's performance defies ordinary investing logic. A 700% gain since 2014, consecutive years of returns that most fund managers couldn't match once in their careers. And all of it, officially, accomplished with nothing more than market insight, impeccable timing, and a portfolio that just happens to thrive in industries Congress touches constantly. By the time 2025 rolled around, the Pelosis weren't just a political power couple. They were a market-moving brand. Watchdogs tracked them, day traders copied them, and the financial press started treating Paul Pelosi's disclosures like breaking news bulletins. But while the gains were historic, the scrutiny was growing. Every perfect trade sharpened the knives, and the next year, the one we're about to get into, would push that scrutiny to a level even Nancy couldn't simply smile her way through. By this stage, Paul Pelosi's disclosures weren't just routine filings. They were alerts to the entire investing world, and some of them, either for their timing or their sheer scale, became financial flashpoints. Slack, the pre-IPO shuffle, 2019. Late 2019, just months before Slack was acquired by Salesforce for $27.7 billion, Paul built a position in Salesforce. The public explanation at the time, strong fundamentals. But when the acquisition hit the news, Salesforce shares jumped, and Paul was already in position to collect. Nobody accused him outright of knowing beforehand. But in Washington, just lucky is often the most suspicious phrase in the dictionary. Tesla, the infrastructure bill bump, 2021. Mid-2021, while Congress haggled over a multi-trillion-dollar infrastructure package loaded with clean energy spending, Paul Pelosi bought Tesla call options. Weeks later, the bill's framework locked in EV subsidies, and Tesla stock ripped higher. The move was perfectly timed to catch the run-up, and made enough for the kind of Tesla in the driveway moment most Americans can only dream about. Roblox, the lockdown play, 2021. In the first quarter of 2021, with kids across America still stuck in remote learning and video games becoming the new playground, Paul disclosed buying into Roblox shortly after its IPO. The stock popped over the next few months as growth numbers shattered expectations. Whether that was market instinct or just following the trends, the return was quick and clean. Amazon, antitrust timing, 2023. Mid-2023. Antitrust chatter about Amazon's retail dominance was swirling in DC, causing market jitters. Paul added to his Amazon position during a dip, just before the FTC backed away from an immediate lawsuit. Shares rebounded, handing him another well-timed gain. To outsiders, it looked like an opportunistic buy. To critics, it was yet another lucky move, made by a household sitting in on closed-door committee briefings. CrowdStrike, cybersecurity surge, 2024. In early 2024, as congressional hearings ramped up about national cybersecurity vulnerabilities, Paul picked up shares of CrowdStrike. Weeks later, the company reported blowout earnings and won a major federal contract. The stock jumped sharply, making the timing look, once again, uncannily precise. Palo Alto Networks, riding the digital arms race, 2024. That same year, Paul grabbed Palo Alto Networks options just before the company was awarded a multi-year deal with a government agency. When the contract was announced, shares surged. By then, traders didn't even question it. Pelosi's in, so we're in, had become the new reflex on finance Twitter. Apple, the $50 million fortress, ongoing. Apple was never just a trade. It was an empire within the Pelosi portfolio, consistently valued between $25 million and $50 million. In mid-2024, Paul added more during a dip ahead of the iPhone 16 launch. When sales figures smashed forecasts, the stock lifted the entire portfolio. Each of these trades fed a narrative that was already cementing in the public's mind. Perfect timing. Buying into dips before big contracts, policy wins or acquisitions, fast rebounds, positions that turned green almost immediately. Scale. These weren't dabbling amounts. They were serious, conviction-level bets. And here's the context that grated on voters. Nancy's official congressional salary of $174,000 a year was public record. Over nearly 4 decades, she's earned a little over $5 million from taxpayers. Respectable, but a rounding error compared to the hundreds of millions her household now controls. That wealth didn't come from her paycheck. It came from plays like these, made in an environment where information flows freely behind closed doors, and disclosure rules turn the public record into a treasure map for anyone watching closely. The media firestorms over these wins were getting hotter, and in 2025, they reached ignition point when political enemies and public outrage finally converged on the same target. By 2025, the Pelosi trading story had shifted from an ethics debate for political wonks into full-blown political theater. The winds were still rolling in, but the tone of coverage had changed. This wasn't admiration anymore. It was open hostility, and it was coming from every direction. It started in January. Donald Trump, fresh from his political comeback tour, decided to fold the Pelosi trades into his stump speeches. In Iowa, he called her a disgusting degenerate, leaning into the microphone for emphasis as the crowd roared. A week later, in South Carolina, he used a different line. She's the best trader in the world, and it's not because she's smart. The clips went viral instantly. On X, Twitter, Trump supporters spliced footage of Paul's disclosure forms with Wall Street graphics, ticker symbols flashing red and green, while the former president's voice boomed over them. Even people who'd never followed finance suddenly knew Nancy Pelosi's net worth and could rattle off the latest lucky trades like they were sports stats. Then came July. Pelosi sat down with Jake Tapper on CNN for what was supposed to be a policy interview. Somewhere in the middle, Tapper pulled out a quote from one of her critics, something about her family's unmatched ability to beat the market, and asked for a response. Pelosi's face tightened. She interrupted him halfway through reading it, snapping, "Why do you have to read that?" For a split second, she looked less like the calm stateswoman and more like someone caught off guard in a deposition.
I'm sorry that we had some sort of technical issue. Nancy Pelosi became rich.
Why do you have to read that? We're here to talk about the 60th anniversary of Medicaid. That's what I agreed to come to talk about.
Yeah, but I wanted
what that means in the election.
The moment was clipped, memed, and replayed across every platform. On TikTok, users paired it with sarcastic captions like, "She's just better at investing, guys," and "When your Robinhood account can't compete with Congress." The fact that she didn't storm out or lose her temper completely didn't matter. The body language was enough to become the unofficial symbol of the backlash. If the memes were loud, the polling was deafening. In late summer 2025, a bipartisan survey found 76% of Americans supported banning members of Congress and their spouses from trading individual stocks. The support wasn't just broad, it was deep. Republicans, Democrats, independents, urban voters, rural voters, even the usually hard-to-impress 18 to 29 demographic was overwhelmingly on board. This wasn't a niche ethics reform anymore. It had become a unifying issue in one of the most divided political climates in decades. In July, the Senate advanced the so-called Pelosi Act, a name chosen either as a dark joke or a calculated insult, designed to ban lawmakers and their immediate families from buying or selling individual stocks. The optics were brutal. Even though other members of Congress from both parties had their own suspicious trades, the bill's branding tied the entire issue to her. In past years, Pelosi could have counted on her caucus to quietly smother something like this in committee. Not anymore. Too many members had read the polling. Too many had their own vulnerable re-election races. Publicly opposing it now looked like political suicide. For years, mainstream coverage of the Pelosi trades had been limited to the occasional watchdog quote or a quick cable news segment. In 2025, it turned into a sustained beat. The New York Times ran a Sunday feature with the headline, How to Turn a Congressional Seat into a Trading Edge. Bloomberg hosted a round table of hedge fund managers to analyze the Pelosi's returns, like they were evaluating a legendary portfolio manager. Even lifestyle outlets like Vanity Fair got in on it, publishing glossy spreads about the couple's Napa properties, alongside captions noting their combined value in stock holdings. Every outlet knew the formula: list the returns, list the salary, show the gap, let the readers do the math. What really fanned the flames was the online Pelosi tracker cottage industry. Platforms like Autopilot and Quiver Quantitative turned her disclosures into push notifications. Influencers built entire YouTube channels around explaining Paul's latest moves. One Twitch streamer even live reacted to each new filing, placing his own trades in real time while chat spammed all in on Paul. It was parody and profit rolled into one, and for Pelosi, it meant that every move, even a mundane rebalancing of her husband's portfolio, became instant public property. By August, Pelosi saw the writing on the wall. She publicly threw her support behind the Honest Act, a broader stock trading ban covering top federal officials, including the president and vice president. To her critics, it was a cynical pivot, an attempt to get ahead of inevitable legislation by rebranding herself as a reformer. To her allies, it was a pragmatic concession to a political reality she couldn't control. Either way, the timing was notable. She'd spent years defending the right of members to trade, calling it part of a free market economy. Now, with her name becoming legislative shorthand for insider access, she was embracing the ban. The irony was that even if the ban passed tomorrow, it wouldn't erase the last decade of headlines, memes, or scrutiny. Her household fortune was already in the hundreds of millions. The trades that built it were already on the public record. And the nickname, the best trader in Congress, was burned into the political lexicon in both admiration and disgust. The backlash hadn't just been about ethics. It was about the optics of a public servant earning $174,000 a year, presiding over legislation that shaped industries, and somehow living in the financial stratosphere, usually reserved for hedge fund billionaires. That's the image that stuck, and no act of Congress could legislate it away. If there's one thing Nancy Pelosi's career has proved, it's that she knows when the political winds have shifted, and when it's time to tack hard in the opposite direction to avoid getting capsized. By late summer 2025, she wasn't just under scrutiny for her family's trading record. She was standing in the middle of a policy freight train. Both parties had decided that banning congressional stock trading was a winning headline. Even the handful of members who had quietly defended their right to participate in the market were going soft, replaced by sound bites about restoring public confidence. Pelosi had a choice: dig in and fight a losing battle, or reposition herself as part of the solution. She didn't just hop on the first bill that came along. By August, there were multiple competing proposals in play. The Pelosi Act, with its obvious branding dagger, the Ban Congressional Stock Trading Act, pushed by members who wanted an all-out prohibition, and the Honest Act, a broader, cleaner package that also targeted the executive branch. The Honest Act didn't have her name in the title. It spread the restriction to the president, vice president, and other senior officials, diluting the appearance that the bill was aimed squarely at her, and it had enough bipartisan support in the Senate to look like it could actually pass, a crucial distinction in an election year. When she went public with her endorsement, it wasn't an apology tour. Instead, she framed it as a statesmanlike recognition that the public must have faith in the integrity of government. No mention of Trump's attacks. No reference to the viral clips, just a careful pivot to the moral high ground, as though she'd been advocating for transparency all along. Behind the scenes, however, her staff worked overtime to manage the optics. Press releases emphasized her legislative record, her historic speakership, her role in passing landmark bills. The message was subtle: judge me on my legacy, not the headlines about my husband's trades. One reason she'd resisted earlier bans was the scope. Many drafts would have forced members to dump individual stock holdings outright, triggering massive tax liabilities and fire sales. The Honest Act allowed for more palatable compliance, placing assets in qualified blind trusts or moving them into broad-based mutual funds and ETFs. That detail mattered. It meant that while Paul could no longer dart in and out of specific equities, the couple's portfolio could be restructured without vaporizing decades of gains. For a household with hundreds of millions on the line, the difference between sell everything now and move it into a trust was the difference between a crisis and an inconvenience. Even as she aligned herself with the bill, Pelosi's relationships in the upper chamber were quietly put to work. Former colleagues who'd moved over to the Senate were hearing from her office about implementation challenges and clarifying language. The goal wasn't to kill the ban. It was to make sure its enforcement was navigable for members already holding substantial portfolios. In other words, the pivot wasn't just about getting on the right side of public opinion. It was about making sure the inevitable reform didn't become personally catastrophic. Back home in San Francisco, the messaging took a slightly different tone. There, she was speaking to a base that had sent her to Congress for nearly 4 decades, a base that prided itself on progressive values, but was also well acquainted with the tech and finance wealth culture of the Bay Area. In district meetings and fundraisers, she spoke about the importance of closing the perception gap and removing distractions that undermine the fight for larger priorities, phrases that sounded high-minded, but also implied that the trading controversy was simply a sideshow, getting in the way of her real work. The irony of having a bill named after you, even sarcastically, is that it cements your association with the problem forever. Pelosi's early vocal embrace of the Honest Act was a calculated counter-branding exercise. By putting herself in the reform camp before the midterm campaign season, she created a new clip reel, one where she was on the podium with other bill sponsors, speaking about accountability, rather than in a TV studio swatting away awkward questions. And it worked, partially. Editorial boards still brought up the trading record, but they now paired it with her support for the ban. Some voters took it as proof she was listening to the public. Others saw it as political survival dressed up as principle. Pelosi had been through scandals before: policy defeats, internal caucus rebellions, hostile press cycles. But this was different. The trading narrative had cut across ideological lines, making it harder to dismiss as partisan noise. Her pivot was as much about protecting the Democratic brand as it was about shielding herself. If the issue stayed alive through the next election, it wouldn't just be her name in attack ads. It would be every Democrat in a competitive race. By jumping to the reform side, she gave cover to allies and limited the oxygen available to opponents. Privately, some allies wondered if she would even be in Congress by the time the ban took effect. At 85 years old, with a legacy already carved into the marble of American political history, Pelosi could afford to step aside before the restrictions really bit. Publicly, she gave no sign of slowing down. The pivot was complete. The bill was moving. The backlash narrative was cooling, just enough to keep her in control of the story. For now. But passing a law is one thing. Living under it is another. And the question that hung in the air was simple. What does a Pelosi portfolio look like when the playbook that built it is no longer legal? By the time the trading controversy hit its peak, Pelosi's disclosures weren't just political fodder. They'd become a business model for other people. What began as a few finance bloggers pointing out her well-timed wins had evolved into a sprawling, semi-professional shadow market built on one premise. If Paul Pelosi was buying it, you probably should too. The first wave came from social media. On X, Twitter, accounts with names like @PelosiTracker, @CongressTrades, and @HouseStockWatch started posting every new disclosure within minutes of it appearing on the official House Clerk's site. At first, it was novelty content, screenshots, sarcastic captions, maybe a graph showing how the stock moved afterward. But when followers started reporting actual profits from mimicking the trades, these accounts gained massive traction. Some grew from a few thousand followers to hundreds of thousands in under a year. The rules of engagement were simple. Paul Pelosi's trade hits the tracker, followers pile in, and everyone rides the momentum until the hype dies down. It wasn't elegant, but for a while, it worked. By 2023, the tracking game had jumped from free social media posts to paid services. Startups like Quiver Quantitative began offering subscription dashboards that monitored every congressional trade, with Pelosi's moves prominently featured. Then came Autopilot, a platform that didn't just alert you to her trades, but could automatically place the same order in your brokerage account, scaled to your own portfolio size. You could literally set it and forget it, letting a stranger's trades, disclosed weeks after the fact, dictate your investment strategy. It was surreal. The same disclosure rules designed to provide transparency had been turned into a marketing hook for retail investing apps. The phenomenon got its own Wall Street seal of approval in the form of exchange-traded funds. The most notorious was NANC, an ETF that tried to replicate the trading strategies of members of Congress, but with heavy emphasis on the Pelosi household's moves. Its performance wasn't identical to Paul's. The lag in disclosures made it impossible to capture the exact same gains. But it was good enough to keep investors interested. The fund's marketing leaned heavily on the mystique. We follow the trades of America's top-performing lawmakers. The copycatting wasn't just financial. It was cultural. TikTok creators made parody skits about calling Nancy before you buy, or showing fake text exchanges where she tipped off followers. Twitch streamers ran Pelosi Trade Nights, streaming live as they placed orders based on the latest filings. On Reddit's Awe, Wall Street bets, all in on Paul, became a recurring rallying cry, used half-seriously to justify risky bets on whatever ticker had just appeared in the disclosures. Ironically, the growth of the copycat economy made the original ethics concern worse. What had once been a quiet, slow-moving system of public filings had turned into an instant signal to thousands of traders. The moment a Pelosi trade dropped, it wasn't just about her family's portfolio. It could move the stock price in real time. Critics pointed out that this created a feedback loop. Her trades moved markets more because people believed they were based on privileged insight, which made them even more profitable, which reinforced the belief. Pelosi herself never acknowledged the phenomenon directly, but in some corners of the internet, she'd become an accidental investing guru. There were Discord servers where members dissected her filings, like they were company earnings reports. Spreadsheet templates circulated for tracking Pelosi-aligned positions. Some even held virtual portfolio parties to celebrate the anniversary of her biggest wins. The absurdity wasn't lost on anyone paying attention. A law intended to promote trust in government had spawned a secondary market that treated a senior lawmaker like a stock-picking service. With the Honest Act looming, the copycat economy faced its own existential crisis. If the bill passed and members could no longer trade individual stocks, the well would dry up overnight. Tracker accounts would have to pivot or vanish. ETFs like NANC would need a new premise. Some in the space started diversifying early, tracking trades from CEOs, hedge fund managers, or foreign politicians. But others kept milking the Pelosi connection for as long as they could, squeezing every last follower growth milestone before the law came into force. By the time the legislative clock ran out, the Pelosi trading phenomenon had gone far beyond the woman herself. It was a self-sustaining ecosystem of speculation, content, and opportunism, a strange fusion of politics, finance, and internet culture that no ethics reform could fully erase. But as that door closed, another question was already taking shape. What happens to the Pelosi fortune when the trading stops? That's where the next chapter takes us. By late 2025, the inevitability of a trading ban had sunk in. The only real questions left were, when would it hit, and how much time did the Pelosis have to restructure their empire before the rules changed forever? The Senate's vote to advance the Honest Act in July had set an unofficial countdown. Insiders whispered about a compliance deadline in mid-2026. giving members a matter of months to unwind any positions that didn't fit the new regime. For some lawmakers, that meant unloading a few million in stocks. For the Pelosi household, it meant surgically reorganizing a portfolio worth hundreds of millions without setting off the kind of public spectacle that could ignite a second wave of outrage. Paul's trading style had always been active, moving in and out of positions with the precision of a chess player, spotting a 5-move checkmate. The new reality forced a pivot from offense to defense. The goal was no longer to capture outsized, short-term gains. It was to lock in wealth, minimize tax hits, and ensure the money kept compounding quietly for decades. That meant a shift into the kinds of assets that didn't show up in congressional disclosure headlines. Blind trusts, managed by third parties without direct communication. Broad-based ETFs and index funds, which could hold Apple, Microsoft, or Amazon without technically counting as individual stocks. Private equity funds, far less visible to the public and slower to revalue. Municipal bonds, offering tax advantages and stable returns. This wasn't the thrill of a 213% gain in 17 days, but it was safe, legal, and immune to the next CNN segment. If there was one area completely untouched by the trading ban, it was property. And the Pelosis already had a strong foothold. Napa Valley Vineyard Estates, San Francisco commercial buildings, and high-value residential holdings. In the months following the Senate vote, real estate professionals in California began whispering about Pelosi-linked LLCs sniffing around premium listings. Buying more property served two purposes. It was an inflation hedge, and it kept capital in hard assets that couldn't be flipped into a news story with a 45-day disclosure rule. Another quiet avenue was international diversification. While U.S. ethics laws would still apply, certain offshore vehicles offered legitimate, if complex, ways to hold and grow wealth with reduced domestic visibility. It's a strategy many ultra-high net worth individuals use, and with the trading door closing, there was no reason to think the Pelosis wouldn't at least explore it. Even without the ability to trade individual stocks, Pelosi's influence was its own asset class. Board positions, speaking engagements, and advisory roles in the non-profit and philanthropic world could open doors to early-stage opportunities outside the public markets. Private deals, venture capital rounds, pre-IPO allocations weren't technically public securities, and therefore could sidestep the restrictions of the ban. They also didn't need to be disclosed in the same way. For someone with her network, those deals could be more lucrative than any single trade on the Nasdaq. Interestingly, the absence of new Pelosi trades became a story in itself. Tracker accounts that had once churned out multiple posts a month suddenly had nothing to report. Retail traders who'd built side hustles on copycatting her moves saw their strategy dry up overnight. The market lost a peculiar kind of volatility spike, those small, sudden pops in volume when her disclosures dropped. For companies once lifted by the Pelosi effect, the lack of those bumps was noticeable, if not crippling. Without the turbocharged returns of the past decade, projections suggested her net worth would level off, still immense, but growing at the slower pace of traditional wealth preservation. In this phase, success wouldn't be measured by doubling capital in a year. It would be about steady, single-digit growth, well-timed real estate flips, and dividends rolling in from the quieter corners of the portfolio. To the average person, it's still a dream life. To a trader used to clocking 45% plus returns, it's a different world entirely. Privately, Pelosi had to be thinking about succession, not just political, but financial. The family's holdings would eventually need to pass through to children and grandchildren, each with their own ambitions and risk appetites. The trading ban, ironically, might simplify that process, forcing everything into structures that could survive without constant tinkering. The public chapter of the Pelosi trading saga was closing, but the wealth wasn't going anywhere. If anything, it was shifting into forms even harder to track and less prone to becoming a hashtag. In the years to come, we may not see another headline about a perfectly timed option play, but that doesn't mean the capital stops working. It just means the game has moved to a quieter table, one without public scorecards. And for Nancy Pelosi, that might be the biggest win of all. a fortune still intact, a career still influential, and the next act unfolding entirely out of view. So what's left for the public? A politician who's gone from defending congressional trading as part of a free market economy to endorsing a ban without a single dollar clawed back or a single vote lost over it. To some, that's vindication. To others, it's infuriating proof that the real insider skills isn't in picking stocks, it's in knowing exactly when to change the game. And maybe that's the real disturbing legacy. Not that Nancy Pelosi beat the market, but that she's beaten the system designed to hold her accountable. Right. Well, there you have it. You'll want to stick around for more stories, as our world is filled with plenty more of these balmy stories. Subscribe. Bah, humbug.